Hello and good day. This is the daily analysis, the silver symbol on January 30th. As predicted, after a short-term slide, the price entered the FVG zone. On the 4-hour chart, our entry point was at the edge of the FVG, with a target at the historical high of 117.723 and a stop loss behind the zone. After that, the price was accompanied by positive momentum, and, ultimately, it was predicted that with the identification of weakness in the bullish trend, the price would be limited to that area and reverse. With the Doji candle, we can use it as an entry point to take a sell position, with the first take profit target at 104.93, the second at 102.01, and finally the third at 95.53. At the present moment, the price has experienced a downward displacement, and after the bullish move, smart money and institutions took profit, which was accompanied by selling pressure, and after that, the price moved to the line of the bullish trend and reacted to the 4-hour FVG zone at the present moment. It is predicted that the price will have a short-term pullback to the upside. A renewed pullback within the range of the ERC candle, and in this situation, we can look for a buy position targeting the swings in the market. By reviewing the RSI indicator, we see that the price has entered the oversold zone, and if it moves upward and if it approaches or enters the oversold zone and a bullish divergence is identified,
we can use this situation as a confirmation for
taking a buy position. However, if the price enters the potential zone and falls below the 22 level, it indicates the continuation of the trend. It's a bearish trend that could be accompanied by selling pressure. By analyzing the 1-hour time frame of silver futures, we see that the price is moving upward and is currently forming a pin bar candle, and it is predicted that there will be a short-term slide downward within the 1-hour order block. And if we identify a reversal in the bearish trend, we can use this opportunity to take a buy position in the market. Set the stop loss behind the swing low and on the edge of the 4-hour FVG, which has been optimized to the 1-hour level at 95.31, or behind the FVG zone at level 94.58, up to the bearish order block zone at level 109.66. In the event that the price falls below, if the price closes below the FVG zone level at 94.35, it is expected that the price will continue its downward trend and touch lower price levels such as 89.908. Accordingly, if the price moves downward, and breaks the trend line, it could have a pullback to the trend line, and after that, enter a bearish phase. However, if it gets rejected from the shadow area of the AR candle and moves upward, we can consider it a confirmation of the trend. It could indicate a bullish market and target higher prices again. By reviewing the 15-minute time frame for the silver symbol, we see that the price is currently in a bearish phase, and it is currently undergoing a short-term correction, which could move downward. It might enter the bullish order block area at the 97.85 level, and if accompanied by selling pressure, and if a bearish order block candle forms lower and closes within the candle's range, with a strong signal in the trend, soon, a strategy number 2 will form for us, which will serve as confirmation to enter a buy position. We can set the stop loss behind the swing or behind the zone at the 94.33 level, targeting a risk-reward ratio of 1:1, 1:2, or at the edge of the order block at the 109.72 level. But if it is accompanied by selling pressure and downward displacement and collects liquidity on the sell side, and in that zone as well, if it closes, a Ryan Soldier strategy is formed. This strategy also indicates buying pressure in the market and serves as confirmation to enter a buy position. However, if it closes below the zone, it can continue its downward trend. Also, by examining the Fibonacci ratio, and by taking the movement leg into account, we can see that our first order block zone is located within the Fibonacci OTE zone, and The 50% level of the order block is close to the 0.618 Fibonacci level, which is considered a highly significant level. By analyzing the DXY index, the price, as predicted, after the weakening of the USD, was expected to have a short-term upward move and head towards a consolidation zone. If it is accompanied by an increase in strength, it can reach the 97.44 level. Set it as a target, but only if there is enough strength to move upward. If not, it can move to the edge of the consolidation at the 96.82 level. Continue its movement and after that, enter a bearish phase. Wishing you success and profits.